Hello and welcome to CFO.com. My name is Amol Dete and you're watching CFO Talk. My guest for this particular edition is Niraj Shah, the ED and CFO of HDFC Life. Niraj, glad to have you.
Thank you, Amol. Thanks for having me on the show.
To begin with, let me ask a very soft or a simple question. Which insurance policy have you bought?
Very easy to answer. I have a lot of HDFC Life policies.
Okay.
I also have policies from some of the other companies, some of which my parents would have bought for me.
Right.
But yeah, I mean, I do have quite a few.
Yeah, I'm sure being a CFO will ensure that some of your pennies goes to the company's profit or the business, right?
No, it's absolutely, it's a product in which interests are completely aligned, right? As a customer, you want peace of mind. That's why you buy the product. The insurance company wants you to be healthy, and of course is there to settle something in case things go wrong. So I think it really works well for everybody.
Sure. So Dheeraj, to begin with, I would like you to understand. I would like you to tell us how's the dashboard of CFO is changing over the years as digital is evolving, the proliferation of technology is huge. And what I understand is the balance sheet of the CFO is also changing. The focus from the balance sheet now has become to, digitalization, profit, and so many things. So how do you see your job evolving? Has evolved maybe in last 2 to 3 years?
So, Mo, you're absolutely right. I think lots have changed. The environment is a lot more dynamic now. There are a lot more stakeholders that you need to really look at. There was probably a time when things were slightly easier in the sense that you looked at maybe a fewer aspects of business. Things were a little more stable. Time was a lot in terms of change, happened a lot slower compared to what it is happening today. So the life cycle of, let's say, a product used to be a lot longer than what it is today. Attention spans were a lot longer than what they are today. Right? And the pace of change is so fast now that you need to have the ability to keep your eye on the long-term opportunity, at the same time be very clear in terms of what's happening on the ground immediately as well. So that changes a lot of things. So things have become a lot more dynamic, and to your point in terms of how the dashboard has changed in terms of thought process as well as what you look at, a lot more variables today. Right, in terms of what's happening from a customer perspective, in terms of preferences, what's happening on the technology side, what is happening in the regulatory environment, what is happening outside, what are investors looking at, right? How are your employees looking at your company and your proposition that you're providing? So all of these things are becoming a lot more important compared to maybe what they were in the past.
So if I, maybe if you could highlight a couple of focus areas that you have today. Is it growth? Is it looking at the profitability? Is it business building or the regular affairs of a CFO? What are the major focus areas for you today?
So if I were to just name two, it would be ensuring that the growth is sustained and the business is built in that sustainable manner, which includes obviously being profitable. And the second is in terms of ensuring that the governance standards and risk management is absolutely top of line. So these are the two buckets in which I think the role kind of goes in. As far as the first one is concerned, in terms of enabling growth, you first look at what are the ways in which you can actually enable that, in terms of what are the investments that need to be made. How do you ensure that you're getting a return on whatever resources that you kind of putting and deploying? That is one part of it. How sustainable is that growth in the market that you're operating in? What is the alignment of interest between customers and the other different stakeholders? On the governance and risk management side is in terms of ensuring that your brand is absolutely protected. Your stature as one of the industry participants and probably seen as someone who is a market leader in multiple ways. How do you ensure that that reputation is intact? And how do you ensure that the risk that is inherent in the business, how is that getting managed to ensure that you are able to deliver on your growth and profitability objectives?
Okay. That was meaningful, Niraj. But tell me something more about taking decisions. You said the attention time has been, reduced, and you have to look at broader picture now. How has your decision making changed? How quickly do you take decisions, or what encourages you to take decisions?
So a couple of things, Amol. There are some things which are in some sense very clear in terms of what are things that you don't want to do as a company, right? So once you set those boundary conditions, it's a fairly evolving market environment. It's very competitive. So there are certain boundary conditions that you need to set yourself in terms of I mean, whether the governance standards, business practices, or in terms of thresholds on risk management, or in terms of profitability, right? And ensuring that the customer proposition that you're providing is something that you are proud of at all points in time. Triangulating all of this then makes it slightly easier to take decisions. Because once you decide what you don't want to do,
Yes.
then it becomes fairly easy to say that, okay, I have the ability to, maybe take this decision in the short term, which will not compromise my long-term interests as a company, but maybe give some tactical advantages in the short term, right? So that could mean in terms of resource deployment, let's say in terms of building out distribution in a certain way, or in terms of running certain campaigns which will promote business in a certain way. So these are some flexibilities that come to you. You mentioned in terms of how products are evolving, same thing there as well.
Right.
There are certain products which will generate more longer term customer interest, and there are products which will probably be consumed for a shorter period of time. How do you balance both of these things to ensure that you still have a fairly interesting proposition from a customer perspective, as well as managing the economics of the business?
Right. So there are a lot of insurance companies now, in fact, specifically operating in life insurance space, which has hundreds of products, perhaps the similar one, which most of the companies are offering. And they're still, spending enough time in R&D, developing different products and everything. Has it also made, a difference in the operating cost of the companies? Has your operating cost gone up? How do you look at your operating cost now? Because the spend on digital is high, spend on marketing is very high. And then coming back to margins, how do you protect your margins or whatever profitability that you have decided?
Right. So Amol, I think you're absolutely right. It's a growing sector. It's in fact still we believe at its infancy. This is a sector which has a runway for multiple decades as we go forward. The three core propositions that we offer are long-term protection, retirement pension products, and long-term savings.
Right.
These are the three segments in which we are. And given the macros that we have in the country, protection gap of 90% plus, pension assets as a percentage of GDP being in single digits, and the savings rate in India with a per capita GDP of 2,200 USD and only going up from here. These are multi-decade opportunities. Products evolve to kind of fit this requirement from a customer perspective. It is still the investment phase.
Right.
So we are at a certain level of margins. We can continue maintaining that. Over a period of time, what will happen is scale will only bring more benefits, which will help you keep reinvesting back into the business. As far as HDFC Life is concerned, we are seen as innovators. And every time we bring a product which works in the market, it ends up creating a category. And when that happens, that allows you that, again, the ability to experiment more, fail more, fail fast, learn from that and move on to the next.
Okay.
That ability to experiment at scale gives us that ability to keep looking at new opportunities from time to time. Also, the regulator has been extremely cognizant of how the market needs to develop. And some of the new regulations that have come in have actually enabled new product categories from time to time. And that is also, helping further development and growth of the sector. So I think the focus on cost is definitely there to ensure that you are becoming more and more efficient, so that all stakeholders benefit. But it's equal or more focus on investing in terms of building out new products, in terms of building out new distribution, because you still have to get through to people. In a very, very vast geography. So it's a lot of these things that are at play right now.
But if you look at the broad portfolio now, which are the products which are adding a good, decent number to your margins, and also because of all these operations, because of the cost is going up, do you also see some pressures on the margins now?
So if you look at the products that are doing well right now, or for the past few years, is we have a fairly large and balanced, diversified portfolio of products. So we have protection products which are scaling up fairly well. In fact, in this period, we have grown our sum assured at more than 45-50%. Retail protection has grown in the late 20s. That has been doing exceedingly well. Very importantly is number of policies has expanded in a fairly significant way. This has been one of the areas of improvement for the sector for the past few years. But for the last year and a half, significant volume growth has also happened. So that means you're getting more and more new to industry customers, more and more new to HDFC Life customers. That is something that is becoming very important. Similarly, on the pension and annuity side, a lot of growth has happened on that front as well. So
Right.
between protection and annuities, it's about 47-48% of our new business premiums in this period. So that's the way in which this is developing. Long-term savings products are also doing quite well, whether it's interest rate guaranteed products or unit-linked products.
Right.
Both of them are doing quite well in this environment where customers definitely want some upside through some of these market-linked products. At the same time, they want some downside protection and certainty of outcome through guaranteed return products. So each of these segments are doing fairly well by themselves.
Sure. You're in the business of covering a risk, but CFO's role is to cover the risk of the company, or maybe whatever the balance sheet might get hampered from. What are the risk areas that you see as a CFO specifically for the insurance industry at large, and how are you trying to prevent it?
So absolutely, very extremely relevant and very important for, let's say, someone sitting in this role or any other senior leadership role for that matter. We are in the business of risk transfer. Customers transfer risk to us and we give them a solution around that. If we do not manage that risk well, we'll not be able to honor a promise. Right? That is as simple as that. So the risks that we cover are risks of dying early, which is mortality, risk of falling sick, which is morbidity risk, risk of outliving one's savings, which is longevity risk, and interest rate risk in terms of whether you'll have enough to cover yourself over a period of time. So these are the risks that we recognize, we learn how to manage them, and managing these risks are done with 3 or 4 things. One is, once you get to scale, you don't have concentration risk, so that becomes a very important way in which you can actually diversify away a lot of these risks that happen in this. Second is in terms of how do you ensure that your pricing is sustainable, right? You definitely want to be competitive in the market, but at the same time, you want to ensure that your proposition stays relevant. And that can only happen if your pricing is sustainable. So that discipline is also equally important. That helps in mitigating a lot of the risks. Third bit is in terms of how do you assess some of these risks that you're taking. And for that, you ask for information. That information in the past used to be caused a lot of friction to customers because I did not have any data sources to get that information from. Today, with customer consent, I can actually ping a lot of databases with which I can get information for the customer compared to what I used to get earlier. So not only am I getting that information to be able to assess the risk, I'm also able to make the process easier for the customer.
Right.
Fourth bit is in terms of sharing risks with someone who has a bigger balance sheet than you. So in our case, it is reinsurers, right? So that partnership with reinsurers is also very important. We basically use them as our partners in growth and in terms of lending their balance sheet capacity to us to be able to grow our franchise. And it works both ways, right? They basically get business from us. At the same time, they are looking at how we are managing risk for them because we are the originators of that risk.
Right.
So that also becomes extremely important. Then it comes to things like capital. Capital that the shareholders have put in, how is that doing? Is it being run efficiently? Are you getting enough return on that? And at the same time, are you protecting that capital? And how are you protecting the capital is by ensuring that all of these risks, operational risks and insurance risks are managed well. So it's a fairly well-oiled machine if it is recognized as being important and non-negotiable. Right, that balance between growth, profitability, and risk management is something that needs to be maintained at all times.
No, sure. Noted your points, Niraj. So, my another and a very important question is specifically about the governance and compliance. In fact, in all my interactions, CFOs always talk about it, from the bottom of their heart. So, on one side, obviously, the companies are expecting you to be part of the typical business. You have to look at the product and so many other things. But risk, compliance, governance has been an integral part of a CFO's desk. We have seen a lot of compliance or maybe governance has been increased specifically in insurance and overall, financial institutions in last couple of years. How do you look at it, one, and how are you preparing for all this compliance? Does it eat up a lot of your time? How do you manage, to comply with all these things? And additionally, has it increased your cost also of compliance?
So, Amol, I'll probably just take a step back. Exactly what you said. Financial services industry worldwide are fairly heavily regulated and for the right reasons. because they basically are sitting at it's the nervous system of any economy, right? And if that any mishaps happen in that, it affects the entire economy, right? So there is no way in which you can have an environment in which regulations are not on top of trends in terms of what is happening and what is likely to happen as we go forward. Any regulator in India or anywhere outside of the world. So if you take insurance, for example, the most important thing for us as a participant is to understand where the regulator is coming from. Right. So if you look at the insurance regulator, they have these fundamental concepts of ensuring that the industry is growing in a sustainable manner and customer interests are protected. These are the two overarching objectives of the regulator. Once we understand that as a participant, every regulatory action that is coming in today or will come tomorrow becomes easier to appreciate. And once that happens, then it becomes very easy to build a business model around it, right? A lot of things are changing as well in terms of how information is coming in. So digital data, all of that is giving you more opportunities, but also putting more risks on the table in terms of fraud, in terms of misuse of information. A lot of these things also need to be recognized, right? So sitting here, I think what is important is for us to be able to take that balanced view of using digital data to increase your throughput in the business and make things easier from a customer perspective. At the same time, recognize where frauds and opportunities for some of these things come in, right? We're seeing this across different levels where a lot of, unfortunately, these things get misused. And that's where the regulator also needs to step in to see that how do they protect the individual customer interest as well as the interests of the companies. And that's where you absolutely appreciate where the regulators are coming from.
Okay. But give us some sense in terms of the cost of compliance. Give us some sense in terms of overall operation cost, and give us a breakup where exactly your operation cost goes. Which are the products where you pay your operation cost is very high? Because a couple of CFOs also told me that their operation cost of very high is also on the compliance and the risk side. So which are the areas where your cost of operation is very high and otherwise?
So for us, if you were to just break down our broad cost, largely it would be in terms of how do we reach out to customers. And we in our industry, we reach out to customers largely through distribution. Of course, we have the ability to, any customer can come and interact with us directly through our website or through calling us up. And there is no need for anyone to engage with an intermediary, let's just say. That is all fully enabled digitally. But that is only 2% of our business. 98% of our business comes through distribution. Either our own employees going out and sourcing business or our partners working with us to engage with customers. So that becomes our biggest cost, right? Then, of course, we have costs of actually setting up our infrastructure and having our people in those branches. And then, of course, our people in our partner branches as well. So that becomes the second largest cost. And then everything else in terms of the third big component would be, let's say, investment in technology. Given the scale at which we operate and the thought process that we have around digital and data, we make a lot of investments on the technology side as well. So these are the three large components of our costs. I would still maintain that while the compliance requirements or regulatory requirements are increasing, I do not see it as a cost. I see it as a way in which you are able to make your business more sustainable, right? So that's the way we really look at it.
So when it comes to the distribution of the policies or maybe sell of the policies, if I use that, to maybe recover your cost aggressively or make it more profitable, are there any focus areas that you have, or you are okay with whatever the products have been sold by the distribution team, or you want the products perhaps with high premium and maybe less claims are sold more aggressively? Is there any strategy, something like that?
So, Amol, there are a lot of these things are, somewhere we get tested every day in the market, right? So we are privileged to have the brand that we have, but there are equally respected brands in the market and we compete with them for the customer's attention. And if the customer sees our product as competitive, they will consider it, right? If they do not, they will not consider it, right? So that is the ultimate test in terms of whether our products are good or customer likes them or not, right? That is one. Second is in terms of are we assessing the risk appropriately?
Yes.
Right?
Yes.
Now, that comes out of our ability to price appropriately, ensure that we maintain a discipline which is in terms of recognizing new risks that are coming in, and then ensuring that we are either passing on the benefits to the customer or appropriately charging for the risks that we take.
Right.
Now, that gets reflected in our overall profitability, right? We also make a lot of disclosures in terms of what is happening actually versus what we are assuming on the ground. So life insurance is a long-term business. Typically, a policy span anywhere between 10 to 40 years.
Right.
So we need to make these long-term assumptions about how many claims will come in, how many customers will continue with the policy, what will be the expense of maintaining a policy 10 years, 15 years down the line. So we make all those assumptions. And then we test ourselves with actual reality on the ground, and we disclose that. It's called operating variances in terms of what is the actual experience versus what we've assumed. For us, historically, for the past many years since we started disclosing this, these variances have always been positive, except for the COVID year, in which there were claims which were due to a certain event, as we can all appreciate. But beyond that, our operating variances have always been positive across all the three areas of life insurance. That tells you that the risk is also being managed appropriately.
Okay.
Our profitability has been fairly sustainable. We have, in fact, over the last many periods of 4 years, we have actually doubled on most of our key metrics in terms of scale, in terms of profitability, in terms of growth, and each of those aspects. So, Vamol, I think it's out there for you to assess in terms of the information that we provide. And as a management team, I think these are some of the things that we look at fairly regularly.
Okay.
Yeah.
Sure. If you look at broadly the industry and maybe Indian economy as a whole, there are a lot of positive factors, and there is a lot of hope that India will maybe grow far more significantly than what it is today. In fact, estimation is it will double its GDP in the next 5 to 6 years. So obviously, a lot of data points are quite supportive when you look at absolutely the economic indicators. How are you preparing yourself maybe for next 2 to 3 years of growth? Because on one side, the economic indicators are doing really well. On the other side, the consumption is also picking up, right? A lot of youngsters are going for loans, and financial inclusion is also has broadened, right? So how are you picking up for yourself? Do you see that as a big opportunity? And if yes, how are you strengthening yourself?
Absolutely, Amol. These are absolutely critical in terms of our sector, because ours is a very, very long-term oriented sector, and all of these very fundamental drivers will affect the way the opportunity shapes up. So each of the things that you mentioned extremely important. The three segments that I mentioned, each of them have different growth drivers. You mentioned about younger customers consuming more, borrowing more. That again triggers in their thought process that I need to protect myself and my family in case something goes wrong, right? So the need for protection has only increased with the trend in borrowing.
Okay.
So we offer protection through different products. You buy it as an individual, you buy it as a borrower, and through each of that, we've seen fairly significant growth that's happening across many segments. Whether it's while someone is borrowing for buying a house, or for a car, or for a two-wheeler, or for an education loan, any of these trigger points puts in a question in someone's mind that, okay, if I'm taking a loan, I need to protect myself, right? And that's where consumption will be one of the biggest drivers for protection over the next many years. Similarly, what's happening is that folks who are getting closer to retirement are recognizing that there are two things that are going to be important. One, they don't want to be dependent on their children. They want to continue living their lives in a good way after retirement, not necessarily just give up on their aspirations and passions just because they've retired. That is requiring a lot of importance has been now given to accumulation of reasonable amount of corpus to be able to maintain a good standard of living after retirement, because you want to be on your own. And also medical inflation, as you know, is 2.5 times that of the inflation that we track, whether on a CPI or a WPI basis. That is also something that's becoming extremely relevant. So the recognition for a significant corpus required to be able to live a good life and maintain one's health post-retirement is becoming a very big driver for retirement products and long-term savings products as well. So if you just look at fundamentally across each of these aspects, we just have to ensure that we are there where the customer is likely to be. And that basically means we have to have that diverse portfolio, and we have to have that ability to reach out to customers in whichever means they want to reach out to us. Directly through a website, yes. Through agents that they prefer to interact with, sure. Through corporate distributors like banks, NBFCs, small finance banks, absolutely yes. Trusted brokers, multiple ways in which customers are comfortable interacting with us, we have to be there. And that's the biggest area of focus for us, to ensure that we continue to scale up, continue to have a breadth of portfolio on the product side as well as on the distribution side.
So you're already, in the top list of, the insurance companies, part of a big conglomerate. Going ahead, where do you see yourself maybe in next 2 to 3 years? Because, as I said, economy is going to grow significantly. The financial institutions will reach to a different level maybe in next 2 to 3 years. So where do you see yourself, and how are you getting ready for it in terms of investments, in terms of scaling up your companies, being a CFO?
Yeah, so I think, Amol, clearly the biggest focus area is what we just discussed in terms of ensuring that we are positioned for growth, right? And for that, we need to do two things well. We need to generate enough cash to be able to continue funding that growth. We need to be running our business well enough to be able to seek capital whenever we need it, right? We need to be in a position where we are also fairly hard on ourselves to become more and more efficient, right? Resources are always limited. We need to find a way to maximize what you get out of those resources. And that is something that becomes extremely important on a day-to-day basis. That needs to become the DNA. Also, in terms of where we see ourselves, I think clearly our aspiration is to double on all the key metrics on growth and profitability every 4.5 years. Now that continues as an objective. So today we've managed to do that over multiple such cohorts of 4 years in the past, and that continues to be our guiding light in terms of how we want to run our business, while ensuring that you mentioned part of this group that gives us that additional responsibility from a customer perspective, from a regulator's perspective. The expectations from us are very, very high, and we have to ensure that we meet those expectations. And for that, we need to have our entire governance and risk management framework in place to be able to ensure that we meet those expectations and deliver on our growth objectives.
Okay. So I think I have covered everything that I wanted to discuss with you specifically, Niraj. But if you could maybe take a minute more and highlight, maybe in a specific way, in terms of 3-4 key areas specifically for the insurance industry as a whole that you see, for HDFC Life as you see, and more importantly for CFO as you see going ahead. Maybe if you take a roadmap of 2 to 3 years, big changes.
So I think for the insurance sector, I think a couple of things are around the corner. A lot of regulations have kind of come in to facilitate growth and development, at the same time ensuring that the customer interests are getting protected. So how do you ensure that you are able to sustainably run your business? So one of the key regulations that is likely to come in now requires us to give more value to exiting policyholders, right? Now that is a very progressive regulation in terms of ensuring that customer interests are protected. At the same time, it will ensure that the industry becomes a lot more responsible in the way they are pricing their products and managing their risk. So I think it's a fairly good development in terms of how to take the sector forward. On the accounting and capital side, there are a couple of regulations that are coming in. Risk-based capital is going to come in over the next 12 odd months. That's expected to come over the next 12 odd months. That will ensure that companies are deploying capital commensurate to the risk written in each of the products. The third is in terms of the reporting regime is likely to evolve into Ind AS or IFRS over the next maybe 2 to 3 years. That will also require a lot more disclosures from insurance companies in the public domain compared to what we see today. Today, we see listed companies on a certain kind of disclosure path, and you have the rest of the folks having a different set of disclosures. That will all change. And that is something that the industry needs to prepare themselves on. And the CFO desk will be at the center of a lot of these things. So I think that will be the role cut out for most of the folks here in terms of ensuring that you are building that robust, sustainable business platform, keeping all of these changes in mind, and ensuring that you're positioned yourself for growth, because everything is aligned in terms of the economy, in terms of how the customers are thinking, how technology and data is making things easier, and the sustainable products that you have at the back end to ensure that everyone is taken along. So I think it's fairly clear in terms of these are some of the things that we'll have to focus on over the next few years. Yeah.
Sure, Niraj. I think that was quite meaningful. Thank you so much for being part of this conversation and sharing all those insights with us. Thank you.
Thank you, Amol, for having me on the show. Thank you.
Thank you. And thank you so much for watching CFO Talk on etcfo.com. Stay tuned, stay connected.